ARK Invest is touted as being one of the loudest cheerleaders in the stock market for Tesla, predicting that it'll go to $7,000 per share by 2024. The shocker? They've sold 400,000 shares, or 40% of their position size, in the last 3 months. Why? I'll let you know coming up. Yes, guys, that's right. ARK has been selling tens of millions of dollars of Tesla stock since November. I'm going to give you my thoughts as to why coming up, but first, let me welcome you to my channel. Hi, my name is Brad, and this is Own the Chaos. The stock market is a crazy and chaotic place, and I've made it my mission to help you own it. So if you want to see more content such as this, hit the subscribe button, hit that notification bell, and give me a good old thumbs up for today's video because it's going to be a good one. So ARK Invest is now being widely known as the company that predicts that Tesla stock is going to hit $7,000 per share by 2024. Now, that's just the base price. The bear case is going to be around $1,500, and the bull case, $15,000 per share in just 4 short years. So why is ARK Invest selling them? Well, first, I think it's important to go over who ARK is and why they invest in the things they do. So what is ARK Invest? I'm going to read right off of their website, and so that we're getting it straight from the source, that ARK is an investment manager focused solely on disruptive innovation rooted in over 40 years of experience. We aim to identify large-scale investment opportunities in the public markets resulting from technological innovations centered around genome sequencing, robotics, artificial intelligence, blockchain technology, and energy storage. We seek long-term growth and capital appreciation for our investors. So essentially what ARK Invest does is that they specialize in investing in disruptive technology and disruptive companies that are changing the way that we've been doing things. You know, I would equate Catherine Wood, the CEO, to despise the term, well, that's just the way that we've always done it. And so they go for things that are outside of the box, which I think is genius in a way, but it can present itself with some seriously volatile environments. But having said that, Catherine Wood, the CEO, is very passionate about what it is that they seek. She is quoted as saying, over time, innovation will displace industry incumbents, increase efficiencies, and gain majority market share. More importantly, disruptive innovation impacts and concerns all of our lives and changes the way the world works, i.e. Tesla and many other disruptive companies that are in the stock market right now. But of all of the investments that ARK manages within their portfolio, Tesla is their largest conviction. So if you think that it's going to go to $7,000 a share, why sell it? Well, I think it all comes down to risk management and just how you manage a portfolio. Some may argue that you could just hold this forever if you really honestly think that it's going to go that high. And while that might make a lot of sense to some people, there is the responsibility of just making sure that that portfolio is managed properly. Think about it like this. If you have a 401k or a retirement portfolio, your portfolio is managed by several different types of investments, and it's not just one particular thing. And your portfolio manager is held with the responsibility of managing that responsibly and managing that risk responsibly based off of your time horizons and risk tolerances. So the best way that I could think of to simplify this for you is that let's just say that you're taking money and investing it in a portfolio that's comprised of 4 different investments, and you want to invest in those all equally. So 25, 25, 25, 25%. And imagine that it's on a pie chart. Well, if let's just say that one particular investment starts doing extremely well, what that's going to do is that it's going to increase that piece of the pie. And so the thought is to rebalance that portfolio and take the profits that you've been making from that stock that's been doing so well and invest in those other 3 companies that you have in that 4-part portfolio in order to increase your chances of making even more profit and then also managing risk at the same time. So that practice is exactly what Cathy Wood in ARK Invest is doing, whether it is with Tesla or not. And I'll let her explain it to you a little bit in a recent tweet that she just put out as to why they're selling Tesla stock.
Hi, recently at ARK Invest, we've been asked quite a bit about our trading activity. Well, we've been in a volatile market, especially when it comes to innovation. And disruptive innovation is inherently volatile itself. We take advantage of trading opportunities that this volatility presents. So if a stock is down for what we believe are very short-term or short-sighted reasons that have no impact on our 5-year time horizon, we typically will be buying a stock like that. On the other hand, when a stock reaches 10% of our portfolio, we cannot buy any longer. We can let it run up to 12, 13, sometimes we let it go a little above that, but typically, because by that time the stock has run 30%, has done 30% better than all of the other stocks in our portfolio, we will take profits. This is simply portfolio management. Now, in the case of Tesla, as you know, we bought it down into the 180 range, and as it approached 240, 50, it had crossed over 12, 13% of the portfolio. We were taking profits because we were getting opportunities elsewhere in the portfolio, particularly in the genomic stocks, that we felt we should take profits and reallocate the funds. That's simply what has happened here with Tesla. Last year, our trading in Tesla contributed 175 basis points to performance. So the trading around disruptive innovation is another important source of alpha generation for us here at ARK Invest.
So as you can see, Cathie Wood is trying to prevent the ETF, that portfolio, from overexposing themselves to certain risk. And if you can see here, as I share my screen with you yet again, and we pull up the ETF that Tesla is in, you can see that Tesla is still their largest conviction right now as it stands, with 11.19% being the total weighted percentage of their portfolio, with everything else falling pretty far behind. So what Cathie Wood is doing and what ARK Invest is doing is managing their risk based off of their time horizon or their overall goal for this portfolio. They're taking the profits that they're making from Tesla and then adding them to the other, investments that they have within this ETF. Now, again, a lot of people may question why they're doing this and they should just continue to let this run. But again, they're protecting themselves and managing risk. Tesla has gone up a considerable amount in a very, very short period of time. And in a lot of cases, people would argue that it's even been as erratic as a penny stock, and it's with something that's trading at $900 a share, that can be a little bit unnerving and a little bit scary. So it's almost inevitable that it was going to have a pretty serious pullback. So for ARK Invest to sell this at this time and maintain their portfolio the way that they've been maintaining it, it's really just a smart move overall. Now, if there's any question as to whether or not their portfolio has been doing well, I would venture to say that I think that it is. Since June of this past year, it's almost doubled its value in this specific ETF, obviously largely in part due to Tesla just doing so well. They were able to buy the stock at $180 a share, and so basically what they've been doing is just doing the fiscally responsible thing to manage their risk while also continuing to grow the portfolio. And in my opinion, I think that is a very smart thing to do. Like I said, there's a lot of people out there that would probably argue the fact, well, if you feel so strongly about the stock going up like this, why wouldn't you just stay into it and not sell a dime? Well, who's to say that they can't sell some Tesla at the top and then buy even more Tesla as it starts to pull back? Anybody who's even the novice of traders could tell you that Tesla was due for some sort of pullback. Now, I think it's been incredible that Tesla has actually been holding its own in the $700 range. The speed in which it went up to $900 and almost $1,000 per share was absolutely crazy. So it was due for a pullback. I do not blame ARK Invest for selling all the way up here. There were many people that did so that they could just buy the effing dip. So now that you have the facts, my opinion, I now want to hear from you. Leave me some comments down below, and I respond to all of the comments as well. Whether you are on either side of this, do you think that ARK should have just held all the way through, or do you think that they were being smart and managing risk wisely by selling some of their stock and maintaining that specific amount within their portfolio? Definitely want to hear from you, and I respond to all the comments. And speaking of responding to comments, I decided to try something new on this channel as well and actually read one of the comments and questions and answer them right here on this video for you. So today's question comes from Chuck Halen that says, "Hey Brad, based on what you said and Tesla's remarkable climb, do you have any input on China's version of Tesla, ticker NIO? Is it possible to see it take a somewhat similar path to what has happened to Tesla? I'm not sure it goes to 1K or anything, but a continuation upward. They seem to have some of the same success with their product." Thanks, bro. Well, Chuck, you got it, bro. So here's the answer to your question. NIO is different than Tesla in the fact that it's just a car company. It's just an EV company. And Tesla is so much more than that. Not to mention that NIO doesn't necessarily have the technology that Tesla has either. And so I think that NIO may have a similar move because there's a lot of companies within this space now that are starting to get noticed. And so that's what you call like a sympathy type of play where NIO might get some movement because of what Tesla's been doing. But given the fact that NIO doesn't necessarily have nearly the range in their electric vehicles that Tesla does or the autonomous technology, never mind the fact that Tesla is so much more than a car company as they're, into artificial intelligence as well as energy storage and solar power and all of that good stuff. Tesla is just going to move so much faster because of all of those things and not just what they have going on in the automotive side. Not to mention, history has told us that whenever China decides to come out with a product, they're usually copying and giving you some sort of knockoff of a better version that's typically out there. You can look at the Chinese versions of Mercedes that they have, and they're just awful. They might look nice, but the inside is terrible. The reliability is terrible, and it's just another typical Chinese product that they're trying to copy off of a superior product. So I hope that helped, Chuck, and I hope that helped you guys out there too that may have had the same question. So again, leave me some comments below about today's video, or maybe you have another question that might end up showing up in the next video. So make sure that you're putting those comments down below. Also, if you're looking to learn how to invest as well as day trade in the stock market, I would encourage you to come over to WeTradeHQ.com. We have an amazing community of like-minded individuals who love to celebrate each other's success. It's a great community to be a part of. The links are down in the description below. I have a mentorship where I go live with folks just before the market opens, and I stick with you all throughout the day, and it's just a great community to be a part of. So if you like this video, I certainly would appreciate a thumbs up, and if you want to see more content such as this, be sure to subscribe, hit that notification bell, and that'll do it for me, guys. So again, thank you so much for tuning in. As always, I will see you all before the bell, and B. Smith is out. Yes, so Uber operated at a loss of 64 cents per share compared to the estimated 65 cents per share, along with other goodies in their latest earnings report. And I'm going to give you my opinion as to whether or not I think it's a worthy investment coming up. But